Hey, good morning. Let's go over today's trade plan. So in the overnight session, the buy side has been dominant and our short-term bias heading into the open is neutral to bullish. Although the buyers are in control, we are set to open near the 88 quarter to 90 quarter resistance zone where responsive sellers can still defend. But that doesn't necessarily mean that we have to short 88 quarter to 90 quarter because the overall bias in this market continues to favor the buy side. It's important to note that the relative volume so far has been quite light, and the European markets are closed in observation of Labor Day there. So that's something to keep in mind for today, that the volume could continue to be fairly light, and the market may just continue balancing within a range. And that's why we could still get sell side active at the 88 quarter to 90 quarter resistance in the event of a continuation move and a break above that zone. We can still get sellers active at 94.5 to 96.5, and that area has potential to cap the upside, mainly due to the light relative volume. On the downside, we have pre-market support at 80 to 81.5, followed by the initial support zone at 76.75 to 78.75. So the ideal trade location for the long side is going to be down at initial support, but given how strong the overnight session has been, buyers can be active and defend the 80 to 81.5 zone as well. So one thing I've covered in the recent recap videos is how it's important to match your execution to the opportunity potential of any given day. The higher the reward potential or higher the opportunity potential, the more aggressive you can be in terms of your intraday execution. So going into today, we know that the European markets are closed. The US markets are running on lighter volume, which means limited opportunity potential, and that means that it's better to be more conservative in your execution today rather than getting extremely aggressive and trading at very unfavorable prices at bad trade location and expecting a big continuation move. That's not to say the market can't slowly make its way higher, but in the short term, anytime the market makes even a 5 to 6 point short-term directional move, it's probably going to get exhausted. And we know that in light volume environments, there is a lower probability of follow through after short-term directional moves. Now that can play in our favor on the long side. If the market makes a short-term directional move 5 or 6 points lower into pre-market support or initial support, then the idea that there is lower probability of follow through can actually play in our favor if we're going long at pre-market support or initial support. So we just have to be very mindful of the type of environment that we're trading in and then match up our execution to that type of environment. So heading into the open, let's see how the market responds to 88 quarter to 90 quarter. Again, that's an area where sell side could defend, but the bias does continue to be fairly bullish. So we still have to exercise a little bit more caution on the short side, and the safer trades are still going to be on the long side. So those are the main thoughts heading into the open. Let's see if the buy side can maintain the control that we've seen here in the overnight session, and we'll take it from there.